Good afternoon. Markets in Asia traded mixed amid some lingering concerns about global growth and ongoing geopolitical tensions. Japan's Nikkei fell 1%. A number of major markets, including those on the Chinese mainland and in Hong Kong, remained shut for the Lunar New Year holidays. European stocks were lower, with investors focusing on the outcome of the European Central Bank's next policy meeting as inflation data in the Eurozone remains a concern. U.S. stock futures fell as traders poured through the latest batch of corporate earnings, which included disappointing numbers from tech giant Meta Platforms. To talk to us about the latest market dynamics and also touch on the Meta Platforms and their results yesterday, we are joined by Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. Your take so far on how our markets have performed this morning?
Good afternoon, Anastasia, and to you, all your viewers. Yes, our market is flat this morning with a positive bias. We're seeing quite good performance from our resources stock. So given, as you've described already, European markets being on the back foot after the poor results announced by Facebook, or now known as Meta Platforms, I think it's quite a good outcome, and we're holding up very well on a relative basis compared to other markets around the world.
It's the third day of February. I mean, when you look at, I suppose, the week so far versus the month of January, which many of our market analysts have said so far was quite turbulent and filled with volatility, how are we doing so far from a global perspective as well as you look at the third day of February?
Yeah, look, February started a lot better on the front foot. I think investors got a bit of a shock at the beginning of the year as concerns about what the Federal Reserve Bank in the US would be doing in terms of hiking rates. I think nerves have calmed down a little bit, but as we've just seen overnight, I think the real driver of performance in markets will be the outlook statements of many of these companies who report, and any disappointment is going to be punished quite heavily. So I wouldn't see the positive start of February as an indication that the worst is over yet.
Right, so let's talk about Pepco releasing a sense statement this morning saying that they are eyeing Brazil with the acquisition of retailer Grupo Avenida. So far, some analysts saying that it ticks the boxes, the fact that they, going into an emerging market, and they're also going to be retaining, the founders will rather be retaining a stake in the business. What did you make of that announcement?
Yeah, interesting acquisition. Anastasia, you don't see South African companies buying businesses in non-English speaking countries. So obviously Brazil, big emerging market, Portuguese speaking, good growth opportunities. It's quite a small acquisition. It's 3.2 billion rand. It's 4% of their market cap. I think a lot of upside, very similar to what you've seen or experienced from Pepco locally, really in clothing and for children and the broader market, really at price points which are quite attractive. So they found a business which really resonates with them and which can allow them to have scale and extend their footprint beyond Africa into the rest of the Latin American market. So I think synergies between the two businesses, not really betting the farm on this. And it's a business which needs a lot of TLC. It used to be owned by private equity, had a lot of debt, still family owned. And I think very promising. I think the market, if you see the Pepco share price up 1.7%, really likes the new growth vector, because the concern is that Pepco got so big in South Africa that they may really run out of runway. So now that provides that additional growth runway in a brand new continent.
So let's talk about Meta, because they released their financials disappointing on every metric, whether it's revenue forecasts and user growth. That share price was down almost 23%. What were the key takeaways for you?
Yes, really a shocker. It's the largest market cap decline from a company over one day that we have ever seen in history. I mean, that's quite big headline news. The big takeaways is where the company is investing for the future. Costs are up 40%, revenue only 20%. And the other thing is for growth stock, which Meta or Facebook was, I think the shock to the market is the fact that their monthly user numbers are not growing. And the competition from especially the Alphabet, the Google group, TikTok and YouTube is really hurting their own core businesses for Facebook, Instagram, and the like. You would know better, Nastasia, as an influencer yourself. I think Facebook is something of the past. Also, the big talk is about what their business called Facebook Reality Labs investing into this whole metaverse is going to deliver. The problem is that they've already incurred some $10 billion of losses investing for the future, and the market's getting concerned that this whole metaverse sounds like a really esoteric type of concept, but is not going to bring in revenue or profits in the near term. So at least in the next 2-3 years, we're not going to see profits coming from that.
Unfortunately, Patrice, we have run out of time. However, thank you so much for chatting to us. And hopefully we can chat about other aspects of the market next week and take in those January U.S. non-farm payrolls and basically unpack them a little bit further. But that is Patrice Rousseau, the Chief Investment Officer at Ashburton Investments. Just to note that investors are keeping an eye on the Bank of England's rate decision as well as the rate decision from the European Central Bank. We're going to take a quick break. When we come back, I'll have the alternative investor after that. Stay tuned.